Welcome back, everybody. Sive Morten is here with the ForexPeaceArmy.com. Let's update our view on the euro currency. So yesterday was really big session. You can see the performance on the market, and today, as usual, we take a look at the existing trading setups. Well, mostly they will be actually short-term, so we could trade on the hourly chart or even lower time frames. On the higher time frames, we also will discuss the general situation. But the specific of today's video is that it's too few times passed since the recent statement, and investors now, well, let's call it as a stunned a bit. So they need time to analyze what Jerome Powell said, because if you read the press conference speech, you could see that he said lots of new things compared to the overall economy situation, on inflation, on employment, on the perspectives and so on. In fact, I would say this is just absolutely drastic changes in a Fed statement, and investors will need probably more time to understand what's going on to make the decision. And I wouldn't hurry up with the conclusion making on the next step on the euro currency based just on the recent performance. So now we just take a look in general what we need to control, what the levels we need to keep an eye on to understand what could happen next. But first, I will show you longer term charts because usually we do not consider them in the daily updates, but today it is important. So if we take a look at the monthly chart of the euro, you could see what the particular target market has reached recently. Yes, it's not at every part in any time frames, but we have completed monthly OP target, and as you can see, it's rather harmonic. So from that standpoint of view, this combination usually leads to some respect, especially this is monthly target. So it, in fact, it has the full rights on possible retracement. That's what we need to keep in mind. And as I said yesterday, we're entering in a big target cluster, and market actually stands in the middle of them. And mostly we could say that the major target is done. That's why we're now stands in an area where we have to be really careful to any bearish signs and be prepared that at any moment market could start pullback. That's what important. Speaking about the three drive pattern by the chart on the euro currency, if you could see, mostly it is done. So yes, we could say that until 1948, this is 127 extension of this range, the third drive, but in general it stands, take a look, right in the middle between two drives, and here is mostly it is completed. While on the dollar index it's some divergence, so you can see that here it hasn't quite reached downside extension. It means that here some fluctuations around the area, maybe dollar even could try to complete this target. So all this stuff exists, and that is another thing to keep an eye on. It means that we are standing not very simple situation. From one point of view, the major target is done, and we should be ready for the bearish signs, but at the same time we telling about that possible upper continuation, or maybe on the dollar it will be action down, while euro currency could stand some range and so on. So how to deal with all this stuff, which seems a bit sophisticated. In reality, it is not quite difficult. So if we take a look, for example, in the euro currency, let's return back to our charts on the daily chart. So what the particular invalidation point will be for all this construction? We're dealing with the hand and shoulders pattern, right? So market completed major target of this, A, B, C, D, OP is done. What we could say about this performance? You could see that the CD leg shows acceleration, which is good sign. Usually acceleration happens when the market intends to keep going to the next target, which is XOP, so be higher. Another thing that you have to control is market has to stay above the neckline. Otherwise, if market drops below the neckline, it means that it already doesn't work with the hand and shoulders. So hand and shoulders is completed in this case, and that will be clear bearish signs. So that maybe we're dealing with a deep retracement that is started on the monthly chart. That's just two things to control. So yes, of course, we could, well, split maybe, or actually draw the neckline a bit different here. Maybe you could try to do this something like this, although in this case not quite short, right? So probably that seems more correct. That's what we did in the beginning. So, but anyway, everything will depend on this performance in this resting swing. So if market will go out of this swing and drop below these lows, which is approximately around 1670, that will be clear sign that we're going down. Until market stands above this area, showing some retracements, it means that it keeps chances on a possible upward continuation. So, and as I said in the beginning, don't overestimate this performance. It doesn't mean anything yet. So the clear understanding what investors think about situation, how they treat Jerome Powell's statement, we will know probably only on the next week, because investors, as I said, a bit stunned with the statement. It is really absolutely different statement compared to what we heard last time. Now let's go to the practical issues. So on the 4 time frame chart, here's what we have. OP is done. Market now is retracement. Now it stands at the first support, 1786. That, as we said, this is invalidation point of all the times, right? For our bullish tendency, it has to stay above it. And here we have just 2 levels to watch for. Here's the first one. Next one is a confluence, 1705. Or let's roughly suggest that it's 17 even, 1715. So that's the next area that we will keep an eye on. If we will see the market break it down, we do not consider any new longs by far. That's what for a longer term perspective. For today's session, what we could do. In general, here we have not bad overall momentum. Market stands on rather strong support, so consider natural support area Fib level. On the hourly chart, I would consider this kind of the minor hand and shorters patch. So consider taking the position with it. It's very small potential risk. So if retracement will happen somewhere around 18 or 7, 1810 maybe, you could think about taking long position based on this pattern. It's a kind of the working like an engulfing, if of course market will show this retracement down. So stops will be below this area. This is minimum, this is very small trading stops on hourly chart. Potential target will be just maybe some retracement down to the 618 resistance. It's approximately maybe 1870. Or it might become the starting point on something better if market will decide to keep going higher. So you just need to control the situation and keep an eye on this stuff. So for now, I do not see anything else for immediate trading. So if you do not trade on the scalp, with the scalp, you're not interested with the scalp trading on the hourly chart and longer time frame, probably you do not need to hurry up and see what will happen waiting for a clear signs, maybe deep retracement or something like this, or get the clear patterns that will be formed here. For others who would like to trade on lower time frames, this step, you could think about this step, because now I do not see anything else. So that's probably enough for me now. See you next time.